Is Netflix's stock price about to get canceled, or is this recent dip just a commercial break before the next big rally? The market's definitely plotting some intense twists. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're taking a deep dive into the streaming behemoth, Netflix, that's ticker NFLX. And all this is based on our research gathered earlier today, September 15th, 2025, around 07:00 a.m. ET.
Yeah, and what's setting the stage this morning is, well, it's a complex economic picture. Pre-market futures are showing some cautious optimism, sure, but what our research really highlights is a fragmented reality underneath. Moody's is suggesting nearly a third of U.S. states might already be in a recession, kind of a patchwork economy. And you've got the NY Empire State Manufacturing Index report due today, which just adds another layer of, uncertainty.
Okay, so a tricky backdrop. How does a giant like Netflix navigate that? Because operationally, our research shows they seem to be absolutely on a roll. I mean, that huge strategic partnership with Amazon for ads, extending the content deal with AMC, plus everyone's waiting for The Witcher Season 4. Business-wise, seems like they're firing on all cylinders.
They really are.
But what does that actually mean for the stock price? Is all that good news baked in already?
That's the conflict, isn't it?
Yeah.
Fascinating one. Despite that clear operational success, our models are flagging Netflix as, well, remarkably overvalued. Based on free cash flow, earnings, fair value looks to be somewhere between $945 and maybe $838, but it's trading way up near $1188. That's what, over 15%? Too high based on those fundamentals?
15%, okay.
And yeah, Wall Street analysts are still largely bullish, 63% buy or strong buy ratings. But here's the interesting bit, the kicker. Sell ratings have quietly doubled. Okay, it's only from 1 to 2 analysts in the last 3 months, but it's a shift. A small one, maybe, but it points to some creeping skepticism. Bit of a whisper in the crowd, perhaps.
Right, a whisper. So models say overvalued. Most analysts are bullish, but with a tiny crack showing. What about the actual crowd? Are investors buying the story or feeling that skepticism?
Well, if you look at the options market, our research there shows it's actually telling a largely bullish story. The put-to-call ratio is pretty confident, down at 0.75. That means more bets on the stock going up than down.
And what's the big bet?
The most popular wager right now, for Netflix to hit a, frankly, lofty $1,740.
Wow.
Yeah, and get this, short sellers. People betting against the stock, they're practically nowhere to be found. Short interest is tiny, like 1.57% of the float.
Huh.
So it really suggests the brighter market, the crowd, isn't expecting any significant downturn at all. Very positive sentiment overall.
Okay, all right. So we have the big picture, the company's wins, the valuation flag, the market sentiment, but often the charts tell their own story. What are the technicals really saying here?
Yeah, the charts are interesting. The long-term trend, that's still positive. The 50-day moving average is comfortably above the 200-day. That's generally good.
Okay, long-term good, but short-term.
Short-term it's different. If you zoom in, the trend has clearly reversed. Recent price action broke down pretty decisively. And volume-based indicators, they're sort of flatlining. Not much conviction either way, buying or selling.
No strong push behind the moves then.
Exactly. And momentum.
Oh.
Well, nearly every momentum indicator we track has rolled over, pointing firmly down. Think of it like the engine just stalled that upward push. It's really faded.
Stall, okay. What about volatility? Has it been jumpy?
It was stable for months, actually. But this recent drop brought a little uptick in price swings. It suggests there's some actual energy behind this downward move now.
Got it. So let's pull all these threads together. The macro uncertainty, the company doing well, but looking pricey, bullish sentiment clashing with these stalling technicals. What's the final strategic outlook from our research? What should we be watching?
Okay, so synthesizing all that, our verdict comes down to neutral with a bearish bias.
Neutral, but leaning bearish. Why?
Well, the core insight here is really a tale of two things. You've got this fundamentally strong content machine, that's clear. But the stock itself, it looks like a growth story that just ran too hot and has now hit a technical wall. Our analysis suggests future success is, frankly, more than priced in.
Okay, priced in. What are the risks to that cautious view, though?
Definitely the bullish options market. You saw that $1,740 bet. And that extremely low short interest if some good news hits, there isn't much selling pressure built up to resist it. Plus, that strong long-term trend could just absorb this kind of pullback. It's possible.
But the bearish lean holds for now.
It does. It really comes from that potent mix. The stark overvaluation combined with that clear, short-term technical breakdown on the chart. It's flashing warning signs. So for the next few trading sessions, the key battleground levels look like this. Bulls need to defend $1,182, that was the recent low, And critically, that $1,150 level, the bottom of the recent range. A decisive break below $1,150 could open the door to a much deeper correction.
And for the bears, where's the resistance?
They'll face hurdles trying to push it down further. Resistance is likely around $1,211, the recent high, and then up to $1,250, the top of that range. And, our bearish bias would really be invalidated if the stock manages to decisively reclaim and close back above that $1,250 mark.
Right. So while Netflix's content strategy looks like a blockbuster, its stock chart might be heading into more of a suspense thriller. Definitely need to keep eyes on those key levels you mentioned. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.